Hey everybody, Jessica Morrison, realtor with Ferris Property Group based in Indianapolis, able to serve your global real estate needs. We are back with another interview today, starting off with Mike Bentley, also at Cross Country Mortgage, if you've been following our series. Mike, thank you so much for your time today. I can't wait to learn more about your experience as a loan officer and your take on the current market.
No problem, Jessica. I appreciate the opportunity, and I know we've been trying to get this on the books for a while, so excited to dive in with you.
Yeah, you are in high demand. I know you've been a Ferris Property Group preferred lender for quite some time now. And I think that speaks volumes to not only your professionalism, but how fun you are. I know Todd, Megan, and Terry all like to have fun doing real estate, not just as a business, but creating those long-term relationships. How did you get connected with them?
Actually, through my financial planner, Donovan with Northwestern Mutual connected me with Terry, and we just hit it off, and more importantly, have just become really good friends over the last few years of working together. And I think that's what's super important is to enjoy the people you work with and interact with and help people along the way of purchasing their biggest thing that they're going to purchase in a home. So that's how I got to be in connection with them, and I've enjoyed every bit of it.
So as a loan officer, can you describe your a brief background as to your history and maybe briefly what sets Cross Country Mortgage apart? Because most consumers, when I talk with them, the conversation tends to be, are all mortgage companies the same? Like, what's the difference between X and Y? Why would I differentiate?
Absolutely. Yeah. So, yeah, like I said, Mike Bentley, Cross Country Mortgage. I've been in the mortgage business for approximately 12 years now. Not necessarily on the origination side the whole entire time. Started out in a marketing/business development and recruiting role. Really enjoyed that, and never really had a desire to originate loans. It just never was something that crossed my mind until a gentleman that we came across, a really great guy, was like, "Mike, you really need to think about originating loans." And I kind of took that to heart, and approximately 5 years ago decided to jump in, and super glad I did. It's been one of the most rewarding and fun things that I've been able to do, and just really enjoy getting to know people and working alongside realtors to help people make the biggest decision they're going to make in purchasing a home.
Yes, and for those of you watching, especially as realtors, I've done a number of transactions where sometimes you have a headache with the loan officer or you don't always know what's going on the other side of the deal. And Mike has become one of my preferred partners because he impressed me when he represented a buyer and I was the listing agent. And I appreciated the communication, the proactiveness. And then I think for just a testament of Mike's experience, having earned the repeat business of my managers who do a lot more volume than I do. I think that's just a testament of the caliber of the person that you guys are listening to. Not trying to puff up Mike or anything like that, but just appreciate your efforts. And I also want to point out, like, you are one of the nicest people I've met in the last few years in the industry. You're always warm, you're always relaxed. And I feel like that's sometimes not always the case. You never quite know who you're going to get. And I think when you're introducing clients to someone and I love how accessible you are. That was actually a recent complaint that I heard from someone who was interviewing loan partners where they couldn't get a hold of somebody, and that person lost business because of it. And I've never had that issue with you. I always joke sometimes that if I couldn't call 911 or sometimes in lieu of calling 911, I'd call my loan officers because they always pick up.
Yeah. And that's, I thank you for the kind words. First of all, I really appreciate it. It means a lot. I do take pride in being accessible, and because our hours are not 8 to 5 or 9 to 5 or 9 to 6. You got to think about when the realtors are out showing homes, it's when people are not at work or they're not, it's on the weekends, right? So it's after hours. And that's when they need their answers, their questions answered. Sorry. So I really take pride in that. My team takes pride in that. So that's how we get things done. And we try to make the process as easy and stress-free as possible. I've purchased multiple homes and I know how that can be. So I try to take that out for most folks, and it's not always easy to do, but I think we've been doing it long enough, and I've got great people surrounding me that it does make it easier, and we continue to strive to get better, and that's how we just continue to build relationships, and that's the most important part.
And did we cover why cross-country mortgage, or have you been able to dive into that as much?
We didn't, but I'm more than happy to do that. So
Okay.
my team and our branch has been with Cross Country for a little over 2 years, approximately 2.5 years now. Truly been the best organization that we've been with, and for a number of reasons. One, we're in all 50 states, super efficient, so I can lend in all 50 states. We've got a team behind that. If it's out of state and I'm not licensed in that state, they can help us in that process, which is fantastic. From an efficiency standpoint, I mean, there's not only from a product standpoint, we have more products than we could ever really utilize, to be honest. But just from a pure efficiency, technology, everything's at our fingertips. For us, Cross Country is an originator first company. So they surround the originators with just top-notch people that know that we just got to get the job done. We got to be efficient. So providing us with the technology to do that, the resources from underwriting and closing. Something that I would mind talking about in detail is our hybrid closing. When we go to a closing, the client will the morning of closing, they get the initial closing documents sent to them, and they can e-sign a good portion of those. That way, when we get to closing, they can enjoy that time. They're not there for an hour signing. Agents are, sellers not there forever, and agents, and they can get on and they can celebrate, purchasing their new home. So it's just creating efficiencies like that just make everybody in the transaction say, man, they really have this dialed in and really want to get to A to Z very quickly and painlessly.
So something that I think I'd like to touch on, and I don't want to necessarily put you on the hot seat, but rather allow your expertise to speak into this. So as a real Academy leader member in training for this class this year with my board, we had a recent discussion where it was pointed out that many consumers don't understand what an agent does or a buyer's representation includes and how that agent gets paid. Very, very basic questions where I think a lot of times as agents, we focus on streamlining that process, explaining the efficiencies, and sometimes there's an assumption that the client does or understand just those basic things. And we try to cover a lot. And where I'm going with this is in that effort of efficiency, and there's things that I'm doing to improve that communication or make sure that those discussions or information is passed on within my own business. But I feel like in the speed of how most real estate transactions are operating today, and the amount of electronic communication that we rely on with consumers to e-sign, how are you educating clients that when, let's say those documents do hit their inbox the morning of closing, are you sitting down and going over those documents ahead of time with them? So it's not just because most people, I feel like, would like to believe that they take the time to read what they're signing, or would like to believe that they understand what they're signing. But if you've got a 2-year-old on your ankle and you're trying to just, get from point A to point B, I think sometimes people will go through and breeze through it, e-sign, and mean to go back and read it later, but they don't. So how do you make sure that there's not a skipping of that step to making sure that clients understand what they're signing while still maintaining that efficiency?
Absolutely. So the hybrid closing documents, they don't really contain anything that is going to be numbers driven, right? So nothing that is connected to payment, cash to close, etc. So when I send out wiring instructions and the final closing disclosure, once I approve that from our closing department, I'm sending an email with details, what to expect, what the next steps look like, and then we're going through that closing disclosure in detail prior, hopefully a couple of days prior to closing, so that from a numbers perspective, they get to closing and they know exactly what to expect. There's no surprises. that way their mind is at ease. They don't have there are no surprises. They can enjoy that time. So that the major documents, the super important documents, are being signed at closing, and the title agent is going over those specifics with them, just reaffirming the numbers that we've already discussed. So nothing changes, everything's the same. And I think that takes some stress off of the process as well.
Okay, so let me throw a curveball at you.
Okay.
What questions should a prospective client be asking their loan officer when they're considering interviewing different loan officers or companies?
That's a great question. For me, I look at a mortgage transaction differently than a lot of people. Like, this is the biggest financial purchase you're going to make in your life. Also, one of the biggest wealth building things that you're going to purchase as well. Okay, and if done correctly, like it can be life changing, right? So I think when you're interviewing people, like, one, is it personable? Right? Is that person truly care about your situation and what you're going through, whatever that may be? I'm huge on meeting face to face. I love, like, because it's not just a mortgage transaction. I love meeting face to face, getting to know people, like getting to know their kids, like really diving in, and because I'm not just a mortgage loan officer, I'm a human being too. I have a family. So I think one is being accessible, being a not just somebody that sits behind a computer and takes phone calls and navigates things from the quarterback position, but somebody that's truly available, truly cares about your situation, and guiding you the best that they possibly can, and truly meaning that. Like, when I lay my head on the pillow at night, like, I want to say, like, I did all I can to take care of those people, and I want them to feel that even after the transaction. Like, is somebody going to be available to a client after the transaction? Like, they have my personal cell phone number. They still have access to me. Good news is we service the majority of our loans. So if they have a problem with a payment or escrow, anything like that, they're still calling me. So making sure that you have access to somebody after the transaction, not just up to closing date. And then just what does that look like after that? Like, are they still readily available for you? Like, whether it be 3 years, and also, we're the rate environment that we're in currently, like, rates have just continually increased, and that's going to change at some point, right? And having someone look out for your best interest to say, when rates do start to come down, like, hey, we need to really look at this, and make sure that it's the right thing for the client. Sometimes I've told people, hey, it's not the right time. It doesn't make sense. The money that's going to cost you to refinance, it doesn't make sense yet. So let's pause that a little bit, and let's just be really smart and cognizant of the time, and try to take advantage of this the best time we can. So it's kind of a roundabout way to answer your question, but I think it's just really looking out for the client's best interest, being there for them, throughout the whole entire process, and even after. I take pride in that.
Wonderful. Yes, and I can agree with that. Most people don't work with a company in real estate. They work with a real estate agent as a person. That's why we're not going away anytime soon. That's why during COVID market, especially, a lot of these iBuyer programs eventually fizzled out or got put on hold because the agent was still valuable. And we've seen some lawsuits come out from that. So where agents were not represented in deals and able to properly inform clients. And so that in itself could be a whole video. But I want to make sure that we talk about the market, because I feel like that's what people are really wanting to know. Speaking to the news headlines, the fear mongering, are we having a global meltdown? Is the housing market going to crash? What's your take?
Yeah, great question. I think this is a great time to have this discussion. And I think the biggest thing that I will say is we as realtors and loan professionals, mortgage consultants, have to have a positive mindset right now. And hopefully our clients see that through us. Is, I think we have to stay positive. We have to look at historical data to say that I think the news lines they're all false, right? It's all trying to create people to be scared. But if you look at the history, like, this is typical. Yes, rates are higher than what they have been over the last couple of years, and it takes some adjusting and time to get used to. But Obviously, you look at historical data, real estate has been historically just a great investment. So I think if done correctly with the right strategy and knowing that rates are not going to be where they're at currently forever, right? So you hear a lot now of date the rate, marry the house, date the rate. I know that's floating around everywhere, but I think it's so true.
I literally would have bet money that that quote was going to be said today.
Yeah.
It's a great quote. It's
It
so
is.
true.
Yep. So that's been stolen multiple times, but I think that really is true. And I think it's having upfront, honest conversations to say, hey, from a budget standpoint, what does that look like for folks right now? Yes, buying power is less, and that's okay. But if you love the house, like, let's get you in there. Let's make sure you can afford it, that you're comfortable. And then on the positive side, whenever rates decide to come back down, which we know it's, let's say it's in the next 12 months or so, hopefully less than that, then you're going to be in a position that you can refi and get that payment down, but you still have the house that you love in a market now that is not as competitive as it was, let's say 3, 4, 5, 6 months ago, when we saw escalation clauses and appraisal gaps that got 50, 75,000. We heard some crazy numbers in that time, to where now it's not as competitive as it was because people are a little scared. Now's the time to get in the game, find the right house. Inventory's up a little bit because of all these factors, and it's just a great time to find the right house and get in and take advantage of appreciation over the next year or 2 years or whatever, and even potentially get some concessions, right, to help cover some closing costs, or if it makes sense in the right scenario, to purchase down the interest rate a little bit. I think we have to be cautious of that, because if our intentions are to refinance in the next 12, 18 months or so, we don't want to waste a ton of money to look at that, to do that. So I think we got to be cognizant of those things as well, and make sure we're making wise decisions with our overall goals.
Yes, absolutely. I mean, I can attest to that. Last summer we moved and, saw where the forecast was going and jumped ship, and were able to kind of move up in house. But we strategically did that because we knew we wanted to move up. And one of the biggest propelling factors was knowing what was going to happen with interest rates. And so we went ahead and bought down the interest rate, which was more expensive than what we would have preferred. But our loan officer at the time said that, if we were in the house for 4 years, it would pay for itself. And so that's where, again, having those numbers run and being able to discern with your loan officer and even a financial planner to say, what are my goals with this house? Realistically, how long am I going to probably stay in this house? Most people, depending on your age group, are in a home 5 to 7 years. It's more like 3 to 5 if you're a younger person. So take those things into consideration and don't be afraid. I think sometimes people have their guard up, and you can speak into this, Mike, with us as realtors or even loan officers for a few different reasons. A, they see us as salespeople, which is unfortunate, because even though that is part of our role, like many people, especially just in real estate, I don't know if this is true in lending, are coming from careers like nursing or teaching, and real estate is a second career where so many people have a heart of compassion and want to serve their communities and consumers well. And so sometimes having that background detail of, what are your goals as a family really helps us serve you better. So I think being transparent with us as real estate professionals or your loan officer really helps us take things into a comprehensive viewpoint. But going back, Mike, I've had countless discussions lately where people are hearing, oh, the Fed's going to raise rates. Should I put my house on the market as soon as possible so I'm not missing out on an opportunity? Or how do you see, and maybe it would be valuable as well for you to explain what the actual consumer impact is for when the Fed raises rates?
Absolutely. So we do get an influx of calls and text messages when you hear of the Fed's, hiking the Fed's funds rate, right? And I think the biggest thing from a loan officer perspective and realtor's perspective is we have to let clients know that that's not a direct correlation to mortgage rates. Okay, that's tied to your home equity lines of credit, credit cards, auto loans, things like that. And typically, and what we're hoping for here here very soon is when they figure out at what point that's gonna slow down, it's gonna have the reverse impact on mortgage rate, right? So it's gonna actually bring, once we get to that certain point and inflation, I think it gets under control at some point, then mortgage rates they're gonna come down. Hopefully, we're gonna see a really good reprieve, and that's what I think the biggest misconception currently is when you see those headlines of Feds are going to raise the Fed's fund rate. It's not directly tied to mortgage rates, which I think is huge.
Yes. So just to be clear, for those watching, just because the Fed raises their interest rates does not mean that that is going to correlate over to mortgage rates. Did I say that right?
That's correct.
Okay.
Yeah.
And for more information on what that looks like for your specific situation, please consider talking to Mike or a loan officer, because I feel like it's just a never-ending battle with news and media headlines where they don't always have proper counsel, which you would think there would be a higher filtering process for that. But take some of those things like Zillow estimates with a grain of salt, because people like Mike can speak into your specific situation and tell you exactly what you need to be doing. So as far as this next quarter, Mike, what are you seeing? What are the trends, and how are you setting your clients up to succeed?
Yeah, great question. I think, like I said earlier, I think we're just in a great for the right client, right? Not everybody it's not a perfect time for everybody to move, right? And I think it's a case by case scenario that we have a conversation and say, like, what are your overall goals? Like, is it do you have a long-term goal? Like, because competition is down right now, is it a good opportunity for you and your family potentially to find the perfect home, maybe get it for a little less than you would have 3 or 6 months ago, and then ride out the interest rate temporarily until they do come down, hopefully in the next year or less. So I'm trying to just guide people to think logically through some of these things. And if it's a right time for your family to move, then I recommend looking at it at least. And if it's not, totally understand. If you want to wait until rates come down, here's what I think people need to be cognizant of if they do decide to wait is, when rates do come back down, guess what's going to happen? Competition is going to, if the people that sat on the sidelines for whatever that time was, it's going to bring more people back in, right? So be cognizant of that. As if you're on the fence about buying or selling, just know that when rates do come back down, competition is going to come with that. So I would be mindful of that when you're thinking about that decision.
Mic drop. Oh. Yes, that is a very solid point, because right now buyers have had an easing in the market with competition. And so, yes, that is a very good observation for those watching. I don't think many people have considered that. So, plus the other thing is, even though home prices will continue to hopefully appreciate, not as aggressively as we have seen in months or years past, because that's all dependent on supply, and we had a deficit of housing long before COVID. We're trying to keep up with it, but it's still behind. And then you have a rental shortage as well, and rental prices. I saw an agent who shared something to the effect of, would you do a 1-year mortgage with an adjustable interest rate, and you didn't know what it was going to be the next year? Most people would say no to that. Yeah. And that's the equivalent of what you're doing with a rental, because we don't know where those rental prices are going to increase the next year. So again, it's just really important to try to secure that payment as much as possible in the form of ownership with a home, especially because inflation hopefully will come back down. But that's one thing that you can have control over, is that big payment each month. So Mike, we've got about 3 minutes left in our discussion. Is there anything that you want to leave people with? Anything that's just really important that you share today?
Yeah, I think right now the key is strategy, right? Um, there's some really cool opportunities that we see in this market, and one of which is a 2-1 buy down. Okay, I've closed a couple in the past week or two that we've utilized this, right? So instead of a seller decreasing their price because things are sitting on the market a little bit, we can have a conversation, and I like to call listing agents and say, hey, Mr. and Mrs. Smith just submitted an offer to you. It's going to include a very specific number of seller concessions. And the strategy of that is the 2-1 buy down. So their first year, their payment is calculated based off a 2% less interest rate. Okay. And then in the second year, it's based off of a 1% less interest rate. One of the ones that I just closed, I saved them over $400 a month for the first 12 months, okay, from their standard payment, what it would be based on the rate today. And then the second year, I'd save them just over $200 a month, okay. It was like, $5,600 or $5,800 over the first 2 years, right? That gets us through this first initial, or the rate shock. You don't have to deal with that for the first 2 years. Then your payment would adjust to whatever the traditional rate was that we locked it in at. But you get some reprieve from the payments of that higher rate over the first 2 years. It's a great strategy just to get us through this seasonal time that we're in of increased rates. So I think just having a conversation with a mortgage professional that can guide you on some strategy, and then also realtor partner that can do the same, and you guys can work in tandem and work together to just really compete in this market and put yourself in the best spot. That's what I would leave you with.
Guys, that's amazing. And this is just exactly why you need to talk to a loan officer. I don't mean to sound like a broken record, but I feel like a lot of times when I come into these conversations, most often with first-time home buyers, where I think they would like to be hopeful that they have resources available, or there's just the overwhelm of the whole first experience and they don't quite know where to start. And I guess my encouragement to you for those watching is just that there's more resources than you could imagine available. It's just being able to step into that right channel. And that's why it's so important to partner with the right professionals to help connect you with those opportunities. So Mike Bentley's information is going to be in the description of this video, as well as depending on the social platform where this is posted. Mike, what is the best way for people to connect with you?
Yeah, either my cell phone or email, which I think you will have as well. Feel free to give me a shout, and we'll have just a brief conversation. No strings attached. I would just love to connect with people and see how I can help.
Awesome. Thank you so much, Mike. I look forward to a follow-up talking more about the specialty products that Cross Country has to offer.
Absolutely. Thanks for having me, Jessica.
No problem. Bye.